Okay, well, I think we are live right now. So thank you very much, Alan, for accepting the invitation to our webinar. We are really well. I know that there are some projects in Spain that work with Blockstream. So really a very big project. I have to say that I usually use Blockstream to view all the Bitcoins information, because probably you are one of the best explorer all over the world, and with this kind of message that sometimes miners left, like the last halving one. I use your Blockstream info to see the. So if you can introduce yourself, Blockstream, for the people who didn't know before your company, would be great to start with the webinar.
Sure. Yeah. So my name is Alan Piscitello. I'm the vice president of product at Blockstream. So I oversee quite a few of our different product lines. So as you mentioned, the Blockstream.info, it's something we launched last year. That's our block explorer for Bitcoin, testnet, and Liquid. So it kind of started as a side project, just to do something to be able to show a Liquid on the block explorer, and grew to being a very popular explorer. It's now hooked up as an Electrum server as well. So if you're using Electrum, you can pick that as where it's getting its information from. So it's grown quite a bit. We also work on Liquid, which is what we're going to talk about mostly today. Liquid is a sidechain of Bitcoin. We work on Green Address, which is now Blockstream Green, which is our non-custodial multi-signature wallet, and that's something that we use for our assets as well. And we also work on the Lightning Network, and we have satellite as well that lets you broadcast the Bitcoin blockchain from space. So if you're even in an isolated world, you can do that. So we've recently put up, you could have built your own satellite out of stock kits before, but now we offer the kind of the full kit as well at our store. That's been surprisingly popular. So I think there's, and of course the other part of the business is also we're involved in mining and hosting. So if we have a facility that has a large amount of power, and you can send your miners to us, and we'll get them set up and run it and take care of all the dirty work and building, not setting up all the infrastructure for it, and you just put your miners in and get paid on that. So yeah, we're pretty involved in a lot of different projects in the block in the Bitcoin space.
So maybe you are right now doing a lot of work in Bitcoin, but I know that the last news that you also add USDT, to your network. So what is your mission as a company? So you are like, I know that Blockstream or Liquid Asset, what is your mission as a company? Because you have a lot of activities, but what are really is like to upgrade or to do more services around Bitcoin?
Yeah, so we consider ourselves a financial infrastructure company for the Bitcoin world. So as Bitcoin starts gaining more and more support and importance in the financial system, we think we can take a lot of the principles of Bitcoin and apply that to the rest of the financial system as well as provide key infrastructure so that Bitcoin can grow and mature properly. So we spend a lot of time investing in the Bitcoin protocol and the Bitcoin network. This is kind of what brought us into mining and hosting. We wanted to help distribute that a little bit more and support Bitcoin. So we think it will play a large part in the next few decades, and we want to be really building that infrastructure.
Okay, as I understand, if a company wants to work with Bitcoin, they can choose for sure the network, but they can choose also Blockstream as another way to manage or to do some transactions. Also, the Lightning Network. What are the main decisions to select the different kind of transferring value, or the different kinds of way of transferring value? What do you think that one company have to ask?
Yeah, so there's kind of a couple of different areas, right? So we built Liquid a lot around the idea of supporting other assets and to facilitate a lot of trading applications. So that was kind of one of the big things that we saw. We noticed, like right now, there's a lot of congestion on the Bitcoin network And also Ethereum, you're even noticing that because of the large amount of trading that's going on. And it's basically, a huge amount of this is just moving from one exchange to another, move Bitcoin from one exchange to another, move USDT from one exchange to another. And those are usually very price insensitive transactions. So that you're noticing, if you're trying to do a trade of several $1 million worth of Bitcoin, you don't care if you have to pay $50 to send it. You want to get it over there fast so you can take advantage of these trades. But it also doesn't necessarily need Bitcoin to do a lot of these things. You're relying on one trusted third party to another. So it doesn't really benefit if you're just sending from someone else that's holding your money to someone else that's holding your money. A different type of network might be more well suited for this, and that's where Liquid kind of comes into play. So Liquid allows you to, if you're just sending from exchange to exchange, you can have a network that is built specifically for that, as well as have other assets on it. So if you want to tokenize, you mentioned Tether, USDT is on Liquid, but you can also tokenize any cryptocurrency you wanted. You can tokenize, any asset that needs to be traded at an exchange can be done this way, and it's just a more tailored use case for that, or more tailored solution for that use case. So I think that will benefit Bitcoin by moving a lot of that traffic. If it's just exchanges trading with exchanges, then they can do a more federated network, which is what Liquid is for those trades. Whereas the peer-to-peer transactions that need to occur can still happen on Bitcoin, and it frees up a lot of that space. So I think that's kind of our main focus with Liquid.
Okay, and theoretically, or because sometimes we talk about that, I understand that in the long term, the sustainability of Bitcoin is that they have a lot of commissions in order to maintain the security, as the halving or the issuance of the coins is every time less. So, but with this kind of networks, you in sometimes eliminates or drop some of the commission to other to second layers. What do you think will be? So do you think that Bitcoin will be sustainable only with that kind of big settlement operations, and not with the more small transactions? Do you think that will be, or your kind of networks will maintain this security? Because at final, probably your networks are like that will be who pay these kind of big transactions. Or what do you think will be the future for the sustainability of Bitcoin security?
Yeah, so I think Bitcoin, it's good to separate the Bitcoin on-chain blocks from Bitcoin itself, the digital asset. I think we'll see Bitcoin, the digital asset, being used in many, many different ways with different trade-offs. We're seeing, already Bitcoin is in side chains. It's being wrapped on, put on other blockchains. We've seen private settlement networks where people settle up, independently. We've seen Lightning Network as something as a way to transact Bitcoin without necessarily having those on-chain transactions. And I think one of the concerns I've heard from people is that, if all this stuff moves off chain, there's not enough to pay for security. But really, what you see there is kind of the opposite. There's something known as a Jevons paradox, which is the more efficient something gets, the more it's actually used, the more of that resource that's actually in demand. So there's a time, as energy became more efficient to be produced and to be used, everyone was concerned that this would lead to like a massive drop off in the amount of oil or coal or that's used. But actually, it was the opposite. The efficiencies enabled more use cases that weren't possible before, and drove the overall demand. So I think, as we see, things will move off into other models, with other trade-offs. The trade-offs of using Liquid is different than the trade-offs of using Lightning, which is different than the trade-offs of using like a wrap token, which is different than just having we just got approval for banks to hold Bitcoin on behalf of you as well. These are all different ways you could use the same asset. I think it will, all adding more use cases will eventually drive back to more demand for on-chain transactions, and will eventually, fewer and fewer people will be using that layer to settle transactions, and more will be using other systems while keeping this all secure. And you can use the trade-off that is best suited for your use case. So it's really interesting.
But I like your phrase about separating the Bitcoin network from the Bitcoin asset. It is possible, really? It is possible to separate the Bitcoin network from the Bitcoin asset?
I think you always have the underlying Bitcoin asset that is on chain, and that's where it comes down to. And again, like if you go back to the old days, when gold was a currency, banks would have it in vaults, and that was not very easy to use around for commerce. So you'd be given coins or bills that would represent what that was. We've come a long way where you can do a lot better than that. What you have with something like Lightning Network is you can have a way where that there is that Bitcoin underneath. That if push comes to shove, you can get your Bitcoin back out of it, but you can do thousands or millions of transactions without actually touching the chain. So I think you're transacting Bitcoin there. Even in the simplest model, and this happened very early in Bitcoin's history, people would just leave money on an exchange and do their trades there, and it just stays on the exchange in a database, or do a person-to-person transfer on that exchange. Now it's more trusted in that case than you'd have with an on-chain transaction.
Okay, and about the typical phrase that not your keys, not your coins, in how this goes to the layer 2. It's the same, or what are, because that's like the Antonopoulos phrase that has widespread very much. How this apply to the second layer in some way?
Well, I think you have to treat it as not necessarily your coins. You're relying on that trust. So you have to manage that appropriately, right? So if you, I have a gift card to the grocery store. It has $50 on it, and if the grocery store decided not to honor it or it disappeared, I'd be out $50. I wouldn't be happy about it, but it wouldn't be the end of the world. Whereas I wouldn't want to have my life savings on that. So I think it's a matter of like what are you using it for? So you'll see this like if you have like a game asset or something like that, where you might have. Maybe you're purchasing small items over and over again. You might be perfectly comfortable with trusting them with $10 worth of credit for you, and the worst they could do is they can walk away with your $10, and but you wouldn't do that with a large amount. And I think Bitcoin enables you, like in the previous world, transactions just were very painful to do, and so they're bigger and chunkier. You can have less and less trust in this model, and maybe there's sometimes you can trust a little bit. Maybe there's sometimes you have to have some trust, like trading on an exchange today. You have to have them hold your asset to trade it currently. Now there's different types of exchanges now that you could, maybe not have as frequent trading, but you could have on-chain settlement. So I think there's going to be lots of different models. Different ones are better for some use cases than others. And I think it's just a matter of, getting fixated, saying that everything has to be one specific model might not be accurate. It might be worth the trade-off to have some different models. And I think with the way a lot of cryptocurrencies are set up and a lot of the functionality, you can minimize that a lot more in ways that you couldn't before. So I think it's about trying to do it as smart and minimize as possible. I think people are always going to take shortcuts. There's always going to be custodians that just hold it for you. Maybe for new users, that's the best option. Maybe as they learn and get used to it.
Okay, about the Lightning Network, I think all people think that they have a lot of value. Why didn't have this exponential growth? Why Lightning Network has not growth more fast? And I think at least a lot of people thought that it would be like a very big growth, but it didn't happen, or not as far as I know.
I think it's for where it's at in its maturity, it's come quite a long way. So I mean, I remember we had one of the first mainnet stores that was on Lightning. That was just about 2 years ago, and we got called reckless at the time for doing that. That it was too early to do that. So I think it still is early. Maybe there is a lot of I think there is a lot of expectations and hype around Lightning, but it is going to be a very to get to the maturity that Bitcoin has. It has a lot more complexity, and it will take some time. So I think where it's at right now is pretty reasonable. I think we've also had Bitcoin fees until maybe the last couple of weeks or so. It seems like they've been so low. I was sending transactions with 1 sat per byte, and they get confirmed pretty fast for the most part. If I didn't need it confirmed for a day, I'd be pretty confident it would work. So I think there hasn't been a push to add them yet, but I think that was the right time to kind of prepare that infrastructure. You want to do that when it's calm, not when it's in a panic and there's no other way you can get paid. So I think there's a lot of infrastructure I think that could be made to make it easier for merchants to accept it. I think that's a big part, and I think we're also seeing just kind of the narrative and the kind of use case of Bitcoin right now is very heavily weighted towards long-term store of value more than commerce right now. So I think as that shifts, as more people adopt Bitcoin, there will be more incentive to want to spend that Bitcoin, which will then lead to more merchant adoption at that point. So I think it's a combination of all those factors of where it's at, and I'm not terribly surprised where the level of Bitcoin in the network. It is designed to be, at least right now, a lot of smaller payments as well. So you're not going to lock up millions of dollars just to send it on Lightning. It's just always going to be dependent on a lot of the liquidity of the network itself that can really limit or allow you to spend payments. So I think it's about where I'd expect it to be.
So do you think that the store value has won the battle of payments right now? No, it's almost.
I think it comes first. Just in general, I think people are right now. Bitcoin is something that it is getting some mainstream attention. We saw the Twitter hack where even President Obama was asking people to send him Bitcoin. Yeah. I mean that's something that he probably I wouldn't have expected 5 years ago, but it's definitely getting into the mainstream. I think there's a lot of warming up. Very, very few people I think in the world own Bitcoin, even in some of the more sophisticated technologically people that are out there. They're not holding huge amounts of Bitcoin. They're not. There's not a large number of them right now. So there's a lot of people to onboard. And people are buying Bitcoin because they expect it to be adopted by more people in the next 10 years. And if you're selling it now, you might be missing out on the opportunity as the wider adoption happens. So I think it's just going to be one of those things where people, when you only can pay with Bitcoin, that is going to be the first things to people are going to spend it then when they have to. So that's why I've seen a lot of use cases where services can't get traditional banking, they can't accept credit card payments, or it's too risky, so they'll accept Bitcoin as a way to do that. These are sometimes gray market applications that can't do it, and that's all they'll accept. And you're starting to see some adoption there, and it will grow and grow and grow as more people get on board. So I don't think it's necessarily saying one out. I think there's room for both. But right now, at this point in time, I think more people are, stacking sats as a savings technology than as a payment technology.
People don't want to repeat the pizza events, no, the pizza payment. Remember that costs too much.
Which one? I'm sorry.
No, the people don't want to repeat to pay a pizza with Bitcoin and 5 years later to understand that they pay a lot. So probably that's one of the points. Anyway, as I understand, that's why you are right now using also USDT. But in terms of if a company wants this kind of efficiency or this kind of speed in transactions, like a game or other application, and they can select Blockstream or Liquid or Lightning. What are the recommendations for a Spanish company that wants to use Bitcoin, wants to be in a second layer because it doesn't make sense in economic way to pay these amounts? What do you recommend to use? Because I understand you are right now the leader with Liquid is one of the project most. You are also working in Lightning. So what are your main recommendations for companies that are really right now trying to work with Bitcoin in a very high volume transaction way?
Yeah. So if you're looking at how to accept Bitcoin in a high volume transaction way, I think Lightning is the natural place to look for that. Lightning is very well suited for many payments to do that. And again, we're building a lot of the infrastructure in place so that it becomes easier for you can focus on your business and what you're trying to do, and we can build tools and services that can help you do things like manage channels and manage nodes and things like that, so you don't have to worry about that. So I think that's kind of the area that Blockstream can help serve customers in that area. Liquid, on the other hand, I think is more useful for maybe less frequent, but you need a reliable transfer of value between places, and it can handle any kind of asset. So with Liquid, everything can be settled in 2 minutes, whereas Bitcoin, you're stuck waiting on a block. And even if there was no issues with throughput, with anything like that, the next block is always on average 10 minutes away. So you will have to wait 10 minutes, and that's just one block, and there's always the chance that there could be a reorganization of the chain, and that's necessary for Bitcoin. So if you need something more reliable, Liquid's going to have blocks every minute, and it also adds confidential transactions. So what that means is if you have any kind of application where you need to where someone could use anything that's on the blockchain against you, say you're buying something from a supplier, you don't want to necessarily reveal what you've paid or how much you've paid for something. You want to keep that hidden. So Liquid allows you to make a transaction where only the sender and the receiver, or any kind of third parties that the sender and receiver authorize, can see what's happening. And on the Liquid blockchain, all you see is there's an address or a transaction that was being spent. It goes to an address, and you don't know what's inside of it. And so I think that's another value for any type of, I would say, large financial transaction, any type of assets that you want to be trading. So the idea of Liquid is you can create your own asset on top of it. And so as we saw, Satoshi Games, they created a game token for various items within the game that can be traded around. But you can also create like financial instruments like bonds or your stocks, and they can be transferred around. So if you're an investor and you're buying a bunch of a certain stock, you don't want to necessarily tip off the world that you're doing that. You don't want them to know that you've acquired a whole bunch of this certain asset, because it might mean that sellers will be reluctant to sell at the price you want if they know you're trying to buy it. So this is something where a lot of the financial privacy and kind of the more, I would say, other assets are well suited for Liquid. If you're trying to do Bitcoin payments, Lightning is well suited for a lot of that. For big transactional things, if you're trying to buy like an oil tanker's worth of crude oil, you could probably wait and just do an on-chain transaction for that. You don't mind, the time it takes to get that to settle, or the fees that might occur.
So that's privacy is a really also important question that I know that is one of also the possibilities that allows these second layers. So sure that's also sometimes it's important to have this privacy. But in that case that you know that they are issuing new tokens, in that case, what are the difference between Ethereum? Because in that way you are in some way competing in the issuance, because that kind of assets are in liquid, no? They are not attached to any blockchain, or can be also attached to other blockchain to have some bridge. What are right now the integrability, or how you integrate with Bitcoin for sure, but with others? Because the USDT that right now that you include, it's related to Ethereum, or is a new issuance of this asset?
So it's a new issuance, and so there's actually, all of the models above can be used. So an asset on Liquid, Liquid is just acting as a ledger. Other than the Liquid Bitcoin asset on Liquid, the Federation itself doesn't really know or care what this thing represents. And so for these cases, there are generally central issuers of them. So for something like Tether, we have, they are issuing a token on Liquid. It's independent from the Omni or the Ethereum or Tron versions of it. I think they've got even quite a few more now. But Tether, the company itself, will treat these assets as equal. So let's just say if you had, a bunch of the Ethereum token, you wanted a Liquid token, they would just swap it for you because they can create and destroy it, and it doesn't have any effect over what the market value is. So that's one way to do it. The other way we've seen it is like through a bridge. And so this is something that's possible where, you could lock something up in a contract, and then you could use like a multi-signature issuance scheme on Liquid, where you can create more of an asset or less of it. So we've seen this with someone actually created a Liquid Ethereum and a Liquid Tezos coin, where it's basically the same idea, where it's like a separate federation, and the Liquid Federation can create and issue this asset and is responsible for redeeming it for you. So there's kind of both models. When you have something like a very centrally issued asset, you're already trusting the issuer. If you don't trust Tether, the company itself, to redeem it for USD, you're probably not going to use it anyway. And so, you have the benefit that you can see exactly how much has been issued. You don't have to worry about that they're lying to you about that. You know exactly the amount, and it's a little bit easier for that to be, say, audited, to know that there's the underlying backing of it. For something like a cryptocurrency, it's even easier because you can see in this contract or in this multi-signature wallet, it actually has exactly what has been issued on Liquid. So it's a manual process, but it's also much less, trust involved. You just have to trust that they'll keep redeeming it, but they actually have the funds.
Okay, very nice. So it's very interesting. We will put in the article examples of how you can issue a token in your network, and to know more about how can you do it, the fees, all the things. It would be great to know more about that, and to know more examples about that in order to show to the Crypto Plaza company that probably they are right now sometimes thinking about where or in which network have to issue the tokens. So,
yes. Did you want to dive into that a little bit more about how that's possible, or?
Yeah, well, if you can explain a little bit more, it would
Sure.
be great.
Yeah, so Liquid is makes it very easy to issue assets. That's one of its strengths. You can create an asset if you're an RPC or a programmer, you're doing it through the command line. It's one command, just to say issue an asset. How much do you want to issue? And you can choose to be able to create more of it with something called a reissuance token, or that there's a fixed supply based what was initially created. You can also make the amount of what was issued confidential or not. So you can make it so no one knows how much of it there is. And we have some assets like that. So we have a Liquid Canadian dollar voucher that's confidential. So we have no idea how much has been issued of it. Or you can have it unblinded, which is what USDT does. So we can see exactly how much USDT has been issued. So you create this asset, and there's no smart contract, there's no programming to do. It's just treated at the same level as a native asset, like Bitcoin is. And so this is done. We do have one native asset, which is Liquid Bitcoin. You can send Liquid Bitcoin from Bitcoin into your wallet. You wait a while for it to confirm, and then you can claim it. And now you have this other token that's redeemable for Bitcoin. Or you could purchase liquid Bitcoin at an exchange, trading it. There's also some swap services that will let you do this as well. So you send them some Bitcoin, they'll give you some liquid Bitcoin. So that's what's used for paying transaction fees. The transaction fees in Liquid are very similar to transaction fees in Bitcoin, meaning it's based on the size of the transaction itself, not the amounts of it. The transactions itself in Liquid are very similar to Bitcoin. So they have inputs and outputs, but they also have an asset that's associated with it. The other difference is it has extra information because it's blinded, so you don't reveal how much it is or what asset it is, but you need to provide a proof that it is actually not creating anything out of thin air. So that's something. There's commitments that are added to these transactions and range proofs to make sure everything is in the proper ranges, as well as proving that the assets are one of the inputs. So as a surjection proof that's in the transaction. So this is something that's a little bit different, but if you're familiar with Bitcoin transactions, you can leave that verification up to the libraries that do that for you, and you just treat everything like Bitcoin. And so it's a lot of the same RPC calls. If you're using we have a node called Elements it's like the software. It's like a Bitcoin core. You use this, and you can use RPC calls. There's also JavaScript libraries. There's other libraries written in other languages as well that you can create these transactions. So the fees right now on Liquid, there's plenty of room for more transactions right now. Right now, a typical transaction would cost 1 to 2 cents. It's like 2,000 satoshis or something like that. So it's very cost effective right now. It's cheaper than Bitcoin transactions and Ethereum transactions. So we expect to see a lot of migration as some of these other platforms that are getting more expensive, that like transactions like USDT might start moving more towards Liquid, where you don't have to necessarily pay as much fees, and you're getting very quick confirmations between exchanges.
Okay, that's amazing. And there is some explorer, or there are some market, the data that is not private. Can we see some of the volume of the assets, or even of the block, of the fluid ecosystem?
Yeah, so what we can see is how much of an asset's been issued, sometimes if they allow that, and we can see the total number of transactions in Liquid Network, but we don't necessarily know how much of any given asset is transferring at any point in time. Only the senders and receivers. Even the issuer does not know how much the asset is being sent or where it's been sent to. So that's at least in the native state of Liquid, how it works. We also have there are some use cases where that's not allowed or desirable by the issuer. So we have another tool that we have available called Liquid Securities, and that's something where we use Blockstream Greens, where it's co-signing every transaction, and it's reporting back this information to the issuer. So the issuer can keep track of who actually owns an asset. And this is very useful for some assets like security tokens. So if you have stock in your company, you want to know who actually owns it. You may even need to restrict who owns it. You may only need to limit it to qualified investors or only people inside of the EU. And that's something where you can have this extra feature for some assets inside of Liquid to track that. And we've also seen other cases where you just need to track it. You don't care who owns it. An example of this, so I don't know if you're familiar with Tether Gold. So the idea of Tether Gold is you are owning an actual gold bar with a serial number in their vault, and you can transact fractions of that around, but there's always some gold bar or some fraction of a gold bar, and it's this one gold bar you own. But that's not very convenient to say, I want to trade you this gold bar for this one. So it's all like accounted, like in your wallet, it all looks like it's just all the same. It's all gold in the same vault. But if you want to know at any point in time, which bar do you own, and they can swap it out for you if it makes sense. You can go and basically query that. And to do that, they needed to to know like which wallets owned which UTXOs. So it's just a mapping of like, well, I have this wallet. What gold bars do I have? And they can tell you without necessarily even knowing who you are, just by a wallet ID. So that's something where just by co-signing that transaction, every time it's moved, you can know what wallet ID it's moving to, but you don't necessarily know anything else. So that was there's a couple other projects that are needing that same functionality, but that's also possible in Liquid. Just needs this extra layer on top.
Really, really interesting things. I didn't know. Okay, taking advantage that you are so expert on mining and also Bitcoin, other things, we can also move to other questions. So it was a halving, I think 2 months ago, or more, a little bit more. But that didn't happen too much. It was out of expectation, but the price was like very calm. We are, I think, the minimums of volatility of the last probably 2 years. Do you expect that?
I think we're seeing less and less volatility with time. I think we're seeing more sophisticated trading that's available, and more players can enter. Bitcoin's gotten big enough where there trading firms on Wall Street actually care about Bitcoin now. I was kind of shocked seeing the kind of interest. One of the first things I did when I started was, we have a data feed product that is sold by the Intercontinental Exchange, which they invite us to the boardroom of the New York Stock Exchange, to talk about cryptocurrency is like something I never would have thought, when I got involved in Bitcoin, that would be happening. So I think we're seeing more and more investors getting involved. We're seeing more and more derivatives platforms, more and more credible platforms being involved, even in the traditional financial space. We saw Bakkt get started. We've seen things on, CME. These things are popping up, and I think that's going to lower the volatility that you generally see, because it's there's just a lot more money to kind of protect against those swings. Now, we saw that massive dump right when COVID started getting very bad, and the stock market in the U.S. went bad, where it dropped from 8,000 to 3,500 in one day. So I mean, its volatility is not going to be gone forever. I just think it's going to be overall lessened. We did see a big rise up before the halving as well, so I think there were a lot of people pricing it in. And I think in general, the halving effects take some time to come about. So I think with mining in general, what you're going to see is a lot of the less efficient miners going offline and being replaced with more efficient miners. I think that's what we're seeing now. We've already seen the hash rate already go past where it was before the halving. That's a lot of people were talking about death spiral of mining, and it's kind of the exact opposite that's happening. There's even more interest in mining than ever before. I think that we'll see, as more efficient miners come on board, a lot of people are mining to acquire Bitcoin as a cost-efficient way to do that. So as they're getting more efficient miners, they need to sell less to pay their expenses. Therefore,
it's more efficient. Do you think if you have to select between buy or mine?
Depends how much you're trying to get. So if you wanted to buy, say, $100 million worth of Bitcoin, it's very hard to do that on the open market without making the price go up quite a bit. Whereas if you do it with mining, you can buy some and mine some. So we've always viewed mining as a kind of a downswing protection. So if you buy some, you end up mining. If you're mining, you can end up acquiring more Bitcoin during these downturns because there's less people mining. Whereas during the upticks, you still get the upside of Bitcoin, but you're maybe not as much as if you would have just bought the Bitcoin yourself. So I think there are. I mean, I've definitely heard of this from several places of people. They want to get large amounts of Bitcoin. You can't just buy it on the market. The markets aren't deep enough to do that without driving the price up tremendously. Whereas it's kind of it's almost a way to dollar cost average over time, where you pay a little bit right now for the equipment, you pay for the electricity over time, and you end up with Bitcoin. As I had a very small personal mining operation, and that's kind of how it served me as well. As I pay the cost up front, but could basically lock in buying Bitcoin for upwards of a year or two.
It's becoming very professional, no? Mining each of these steps is becoming very professional. I think right now it's very difficult that when people can really mine in the country. So in some cases, it's more centralized, no? The mining facilities, the efficiency. What do you think of that? Because in that way, this like move to more centralized network, no, in some way.
Yeah, I mean, we're definitely seeing, it's kind of like it goes towards centralization and then it kind of spreads back out into a different kind of decentralization. So we saw, in the last few years, we've seen a lot of mining go to China, right? Like it was pretty much very dominated in China, in one location, not necessarily one location. The early days, it's running in everyone's garage or basement and or just on your CPU or GPU. It's very decentralized, getting very centralized, and now we're seeing kind of a return back to more decentralization. So as with Blockstream getting involved in mining and hosting, there's a big push to have facilities that are trustworthy in North America, and so that's why we've been able to attract clients like Fidelity. They want to mine, they can't, they want to be sure that it's actually doing what they say it's doing. They want to make sure they're not being skimmed. They need a very professional operation. So I think we're seeing more and more move towards that. There is competition. There's, we've seen mining move to when there's gas that needs to be flared off, and that was just wasteful. That's being converted to power. So I think we're seeing more and more of that. I think in the next few decades of mining, I wouldn't be surprised if I saw electric companies having mining as a core part of their business. It's actually very like the electricity. The more you learn about how these markets work, demand for electricity is very peak driven. So I live in Texas. It's very hot here in the summer. So the power plants all need a ton of electricity in the middle of the day just because everyone's running air conditioning. And that power, they need to build their facilities large enough to maintain that power even when it's overnight and it's cool and not being used. So it's really expensive to build that infrastructure, and it's only used part of the day. And that's really unfortunate. Whereas something like mining comes into play, mining is demanding power all day. And so it offsets those costs. So yes, they will need to build more power, but they're getting a better return on that. And so I think, we're going to see, we've started to see this a little bit, I think, in China, but I think it's going to start happening more and more where anyone who's got, power available, they're going to have a much greater efficiency and demand for this, and it's going to offset the costs. And I think what we'll see is power costs of everyone else will actually go down, which is everyone's kind of concerned that Bitcoin's going to take up all this power and drive up the prices, and you're not going to be able to use electricity in your house. And I think it's going to be the exact opposite. You're going to see massive investments in power projects and getting dams, places that you never would have thought to have before, and be able to utilize all this electricity and supply it to the grid. And it's going to be I think very good chance that Bitcoin is behind a big energy efficiency and green energy boom that occurs.
I think so. It will be like a very big potential for efficiency for mining, for electricity companies, or for companies, for sure. I think that's something that is being studied in Spain also because of that, and I think that could do more efficient the electricity industry. That's really, I think so. One question: proof of stake. Well, finally, I think will be probably Ethereum the year of the proof of stake, or something of Ethereum 2.0 that is probably the biggest proof of stake, or will be the biggest proof of stake in the world. Proof of stake or proof of work? What do you think about that?
I'm a big fan of proof of work. I think proof of stake. We have a pretty large research team at Blockstream, and every time one of these new proof of stake schemes comes out, it's like okay, you find some flaw in it, and then there's another patch to put on top of that. I'm very doubtful that there will be a proof of stake mechanism that can't be exploited or doesn't rely on proof of work or proof of a central party that just basically controls it and arbitrates. So I maybe there eventually will be something. I'm not optimistic about it. I wouldn't bet on it. There's been so many variants. It's getting hard to track them all at this point. But yeah, just the track record has been pretty hard to come by. So it's one of those things where I'll be surprised if I see it.
Is that a risky move for Ethereum? Do you think it's a very risky move to go to proof of stake? 100%.
I have my doubts it will ever happen in Ethereum. So I think it's fairly unlikely in the next, I would say, next 5 years at least.
Yeah. But this is not the plan, no?
The plan's changed a lot, so I don't follow Ethereum too closely, so it's kind of a little bit just from the sidelines. So I don't want to speak with too much confidence on it. But yeah, I remember talking even to Vitalik 2013 before Ethereum launched, and it just seemed like some of the challenges that have been facing the network. I think aren't surprising to some people that have happened, and I think it's just one of those things where the plan keeps changing, so it's hard to tell what will happen. But I wouldn't bet on proof of stake 100% happening in the next 5 years.
Okay, that's interesting. And one of the last questions, I don't know if some people have some questions, will be, you can do it. So what do you think about the price or the capitalization of Bitcoin? What do you expect for the next years in terms of not really how much is going to go up, but how is going to be relevant? How much relevant is going to? So how are the things that is going to happen, or do you think is in order for Bitcoin to be relevant for the next 1 year, 2 years? Probably ETFs. Probably what are the main things that you think are expected or can impact more in the Bitcoin adoption? I don't know.
Yeah, I think the biggest thing this year that's going to happen, I think we've seen with the just a pure amount of money printing that's going on. I think that's not necessarily the effects of it will take place this year. I think that will take a lot longer to make its way back into the system. But what it has done is it's really opened up the eyes of a lot of people to what is our money. I don't think most people understand what our money is. There's still people that think it's backed by gold. They don't understand that it's just, if someone wants to create more and give it to whoever they want to give it to, it can happen. And, in some countries, I think, like Argentina, they are very aware exactly of what's happened. Yeah. We've had this happen. It seems like it happens every 20 years there. In the U.S., we have not seen that, and many parts of the world they have not seen that, and so I think that's kind of a eye-opening experience where no one's questioned it, no one's thought about it, and they are now, and it's just one of those things where Bitcoin just makes more sense. It's not this crazy internet money run by a bunch of nerds that are trading it around. It's more real of money than the dollar is, and I think people are realizing this. And so I think that's the effect you're seeing. I think it's onboarding some of these people who are realizing this. They are buying Bitcoin as a hedge against potential inflation or loss of value, or even seizures of money if it comes to that. And looking at Bitcoin as a technology that can counter that. So I think that's the big story of this year. It's been incredibly easy to explain the value proposition of Bitcoin this year compared to 2 or 3 years ago. So thank you to the Federal Reserve, and thanks to the government of the U.S. for helping pump Bitcoin. It's been really nice.
And do you think the states will buy Bitcoin as they buy gold? Do you think that could happen?
I think it could. I definitely think it will be interesting seeing the first country that does this. Once one does, I don't think it will be anyone big. I think it will be kind of a small to medium country that might be experiencing some shock, or like their currency can't be used and they need to get some value to be able to trade with the world, or a pair of countries that start using it to trade with each other. I think that's where it could happen. And I think Bitcoin could. I don't know if governments or the central banks like will necessarily see it and adopt it. I do know several central banks are very knowledgeable about Bitcoin, have been studying it. It's not under their radar anymore. They know. I think it's just one of those things that they trying to see how to best adopt. I think 50 years from now, that's certainly plausible. I hope I'm around to see it.
And the last question we are within the CBDCs, the central banks. Do you see the some CBDC liquid or implementing some CBDC US dollar or even euro in liquid?
Yeah, it's certainly possible to do this. So liquid is based on elements. I would expect if something like that were to occur, it would probably be a separate chain to do this, but built on the same technology as something like liquid. So it's certainly, compatible with what we've built. If someone wants to do it, I think it would be a good choice to build it. You have basically all the features that they would need to have, including the confidentiality is actually very important if anyone's going to actually adopt that. It would certainly be possible, and I think some of the big countries that have the powerful banks that could do this will try that first. They're not going to just adopt Bitcoin unless they have to, but I think it would be it would be good for Bitcoin if they did do that. It would help get people used to that type of technology and provide a large amount of capital to invest in infrastructure that could be applied in both ways. So it's definitely interesting, and following it closely to see where it goes. I think it will be also kind of the next kind of big story of the next decade or so.
Okay. So thank you very much, Alan. Well, I know in Blockstream, people can join to mine in the network. How are the ways to also to collaborate with Blockstream or with Fluid in some way? How can people join to this project as a client, but as a supporter? I don't know, other kind. I don't know what kind of ways to collaborate or to know more about Fluid or Blockstream.
Sure. So yeah, we're working on so many projects. So there's a lot of open source projects we're working on. Lightning, Explorer, which is for the Block Explorer. Elements is open source. A lot of, if you're on GitHub and you go to Blockstream or Elements project, those are kind of where our projects are hosted. So we have a pretty active community for a lot of these projects. They each have their own communication channels, a lot of times on IRC. If you're a developer, if you're a business looking to get involved, you can reach out business@blockstream.com. We can talk about how we might be able to help you. With the mining, we have mining at blockstream.com. You can, if you're looking to host miners, it's right now focused a lot on kind of large scale customers right now, but we're looking to see how we can serve smaller offerings as well. There is a Liquid Community Telegram group. So if you join the Liquid Community Telegram group, there's a Blockstream Green Community Telegram group. Twitter, if you're there's a Blockstream and Liquid Network each have their own Twitter accounts. So there's lots of ways to reach out to us. We have a Slack as well. So yeah, if there's anything you need in the Bitcoin space, we like to think of ourselves as a kind of a vertically integrated Bitcoin company, that we're top to bottom of the protocol, from the mining all the way up to the higher level networks. We're pretty much working on everything. So I'm sure there's if you're doing anything in the Bitcoin or digital asset space, I'm sure there's something that we could do to collaborate.
Okay, we are right now the largest crypto Spanish community, so we'll be very happy to know more about your community, and if there's Spanish communities there, I'm sure there are a lot of people in Spanish that we are the third language. It would be great to contact with them and to follow.
Absolutely. Looking forward to speaking with more people in the Spanish community.
Okay, because the thing is sometimes Spanish people speak very bad English, as you can see. But yes, we have to sometimes do more content in Spanish. Anyway, we do this kind of efforts for our community.
And we have we're very globally distributed company too as well. So I'm sure we have some native Spanish speakers to the company. Not me, unfortunately. We have an office in Milan, so a little probably easier for the Italians to speak Spanish or with each other there. So I think we have pretty big global reach. So I'm sure there's actually a French community that also formed pretty recently around Liquid. So we've had a lot of native French speakers that have been getting interested in Liquid. So I'd love to be able to set up the same thing.
Carlos that talks very well about Liquid, like Carlos de Satoshi Games, and all the team that is always talking very, very good about your project, about all the things that you can do in your company. So yeah, we have some fans, some supporters, Spanish supporters of your company. So we have to know more about.
Great, yeah, no, I'm happy to set something up, and I can try to figure out round up who would be the best person to help on our side. I'm sure there's someone.
Okay, so thank you very much, Alan. We will publish the video with our community. Really, out of things we have learned from you in this webinar. So thank you very much. Yes, we will include Blockstream. We will follow your news. Yes, and we will begin to work with your things that you have explained to us. Okay,
great.
So
appreciate it. Thanks for having me.
And if you come to Spain, let us know. And come to visit Crypto Plaza, you will be invited to stay in our place.
Absolutely.
Okay, so thank you very much, Alan. See you.